Welcome to Real Vision Live. I'm Ash Bennington. We're live with Balaji Srinivasan. Balaji, how are you doing?
Hey Ash, how are you doing? I'm doing good.
I'm doing well. Backed by popular demand and live without a net.
Sure.
We're going to be talking today about the halving of Bitcoin and a bunch of other things. We've got a great show, a lot to cover. So let's just jump in and get started. We talked a little bit when you were last here, Balaji, about your background. I joked with Raul when we were talking about the interview that we did that you have more degrees than a thermometer. You spent a lot of time at Stanford studying some very serious science stuff, chemical engineering, electrical engineering. I think your PhD is it microbial genomics? Did I get that right?
So I did my PhD formally in electrical engineering, but my thesis work was in genetic circuits of microbes. So using microbial genomes to reconstruct genetic circuits, like how the proteins and small RNAs and so on all talk to each other.
I understood about 20% of that, but it sounds very impressive.
So somewhat relevant to today's stuff in the sense of dealing with, bacteria, archaea, viruses, and whatnot.
Right. It's interesting to me. We touched a little bit on your background the last time you were on, but I'm curious about, just to frame this discussion, how did you make the journey from that background into cryptocurrency, blockchain technology, distributed ledger?
That's a great question. So I'd say insofar as I have I'm a jack of all trades, master of none, but insofar as I have a core disciplinary expertise, it's in statistics and computer science. And so that's kind of a general kind of, tool chain in the sense that, computer science means you're imposing data structures upon an area and you start accumulating tables of data in a database. And then statistics means that you're analyzing those and making graphs of the columns and the rows and all that type of stuff. So from that, basically, that was kind of my home strength, went into genomics, and I did that for almost 10 years in molecular diagnostics and so on, built a clinical genome factory, basically a robotic sequencing factory in the late 2000s and early 2010s, and I was CTO and co-founder of that. And then after the financial crisis basically up until 2008, 2009, I had not really given much thought to the macro world, to your guys' world. But then after the financial crisis, like many people, many things that were previously constants became variables, like the money supply, and M naught, and I'm sure that's being discussed endlessly on Real Vision. I know it has. And so started thinking about that stuff in my spare time. And then after, finishing up at Council, I was looking at, okay, what's next after genomics? Not that genomics is not next, but what other things had been advancing while I had my head down in the details of genome sequencing and whatnot, because, it's a deep field. You can spend all your life there. And so I looked at drones, and I looked at 3D printing, and I looked at, all the web technologies, WebRTC and whatever, all that type of stuff. But cryptocurrency really got my attention, and I taught a class in 2013 on a variety of emerging technologies, one of which was Bitcoin. And I also taught that class online, and that got 250,000 students. And that was basically how I think I got a bunch of folks into Bitcoin and cryptocurrencies in 2013, which was a year when this thing was kind of going vertical.
You were extremely early to the space, 2013, and teaching, and it's a pretty great reach, especially at that stage of the game when a lot of people had never heard of cryptocurrency.
Yeah, actually, I had gotten into it earlier, but I only really was kind of public about it in 2013. I'd say that, I'd heard about it, like a lot of people, in 2011 with the whole Silk Road.
Hi, I'm Raul Powell. Sorry to interrupt your video, I know it's a pain in the arse, but look, I want to tell you something important. I can tell that you really want to learn about what's going on in financial markets and understand the global economy in these complicated times. That's what we do at Real Vision. So this YouTube channel is a small fraction of what we actually do. You should really come over to realvision.com and see the 20 or so videos a week that we produce of this kind of quality of content, the deep analysis and understanding of the world around us. So if you click on the link below or go to realvision.com, it costs you $1 to get a month's access to this incredible treasure trove. I don't think you can afford to be without it.
Earlier, but I only really was kind of public about it in 2013. I'd say that, I'd heard about it, like a lot of people, in 2011 with the whole Silk Road thing and so on. But was when Bitcoin actually, crashed after the 2011, attention that was placed on it, and it came back over the course of 2012, and that was really impressive to me that it was coming back like that. And so it was in the fall of 2012 that I really got really deeply into it. And I remember I have a paper, I think, that's still kind of timestamped from around that time, where I said, this space is interesting, whether Bitcoin itself is the winner or not. Cryptocurrencies are interesting. It's a new kind of technology. In the same way that, like, within genomics, there are various competing technologies, and you don't necessarily know which one is going to dominate and be the Google of the space, but you know that space is interesting, right? And so that was kind of where my head was at in 2012. And, so I accumulated a bunch of BTC and so on. And then, obviously things went relatively well.
Yeah, and I know you did a bunch of other things. At some point in there, you built a biotech shop. You sold it for, I think, $175 million. Had a lot of success.
375, but whatever. Who's counting anyway?
$375 million.
Sure.
Yeah. Yes. So a lot of success in a lot of different spaces that you've had. So it's always interesting to me when someone who has been as successful as you are in a number of different areas chooses something and becomes really passionate about it. So you mentioned earlier. Go ahead. I'm sorry.
No, I was just going to say, like, the bridge from the two was, I got into these emerging technologies. I've been thinking about finance and so on for a while. And the one bridge, a conceptual bridge between the two, is that, when you're in academia, the worst thing, especially biotech academia or biomedical academia, the worst thing the federal government can do is not renew a grant. Right, so not give you money, okay? Because as a professor, as somebody with a .edu, a Stanford.edu address, a reporter or a government bureaucrat listens to you respectfully. You're essentially telling them what to do. Oh, it's a Stanford study, a Harvard study, whatever. They'll actually listen to you, and so academics, kind of get a very different impression of the U.S. government than entrepreneurs, because the moment, so for example, at Stanford, and then I'll connect it to Bitcoin in a second, at Stanford, they used to have these banners. They may still have the banners in the hall at Stanford, Medical Center, called, translational medicine, right? Bench to bedside. And, the visual metaphor is you've got a guy with a bubbling beaker at the lab bench, and he runs to the bedside and gives it to the patient. They quaff it and they get up and they're all well, right? That's like bench to bedside. And that's like, what people talked about is like the highest thing you should do. But the moment that you actually try translating that medicine, the moment that you actually get out and you start a .com, your interface with the federal government suddenly becomes highly adversarial, where they, the same person, the same PhD or MD PhD or whatever, MD that was publishing papers, is suddenly persona non grata because you're a .com, and therefore there's a profit motive, and so suddenly you're a bad person, and everything you do is suspect, and so on and so forth. And that was a huge adjustment. And then what I started to learn was I was like, wow, I had thought the barrier to getting all this stuff out there was purely technological, and certainly that's part of it, but a huge part of it is regulatory, where you have regulations that are set up in such a way that it's not a finely tuned machine where it's calibrating false positive versus false negatives and saying we turn down this, but are we stopping a great innovation from coming through? It's really more something that's just set up to put barriers in your path and let things through on the basis of, quote, reputation, which basically means a large pharma company that can afford to jump through those hoops and doesn't make a fuss when the FDA delays it. Those kinds of entities get through. So over that period of 4 or 5 years, I realized, wow, if this is how heavily regulated diagnostics is, and it's not even heavy regulation, it's not really even the right term. It's anti-innovation regulation, and some of that percolated through to the public. For example, 23andMe, people saw the FDA kind of going after 23andMe. That, by the way, is now resulted in the whole coronavirus debacle. The FDA's block of diagnostic testing is why we have, in part, the current disaster we have. Okay, so pulling it together. So I became very interested in regulation. I'm very interested in the mechanisms of regulation. And fundamentally, regulation is about A, wanting to transact with B, but C, a politically powerful actor gets D, a government agency, to go and block that transaction. Right? So a voluntary transaction between two parties, there's another party that gets a government agency to block it. So as an example, A is a person who wants to buy from a 24-hour store, B, but C, a neighbor gets annoyed at this transaction and gets D, the local government, to zone that transaction into oblivion, right? Now, you might argue that's a legitimate action, and I might agree with you, because the noise of that late night transaction is an externality that disadvantages C, even if it benefits A and B, and therefore it's legitimately zoned into oblivion. And so one way you can get around that is you can use technology. For example, you have Amazon.com, and now when A is buying from Amazon.com, there's no noise, and the neighbor is not annoyed, and so that transaction is no longer zoned. And this is just one of 50 different advantages that internet companies have. Amazon.com can operate 24/7 in a way the corner store cannot, right? So, go ahead.
No, I was going to say, just to give a bit of the background and the context, there's so many things that we could talk about. We could do a week of shows on any one of these topics. But just to give a little bit of context, you were at Stanford as a professor. You taught there a number of different classes, and I think in your typically very diverse array of backgrounds. And for those people who are not familiar with your work, there was a bit of an uprising on Twitter early in the Trump administration to get you appointed as head of the FDA.
Yeah. Well,
some friends that were putting in the Valley who were putting you forward and saying, listen, you want to shake things up in Washington. You want an FDA that's radical. You want an FDA that's going to do some crazy, wild stuff that's going to really push to actually solve disease and to cure people and to treat patients. Balaji is the guy for the job.
So, the thing is, I can tell you, I guess, I haven't actually talked about this before, but I can tell you, what that was like and what have you. So first is, I could have been deputy commissioner, so number 2, that was on the table. But the reason I turned that down is several reasons. First is, I had 10 years in technology, I understood the industry and so on, but Washington is something where it's a shooting gallery, and if you don't have 10 or 20 years in the swamp, it doesn't matter. You can't really proceed on pure merit. You need connections and so on and so forth. With that said, here's actually, what I would have done is minimum necessary change at the FDA. If you want to know what my plan would have been on the first day, okay?
Yes, very much.
All right, so my first day plan, first thing I would have said is to everybody, look, almost everybody here, your job is unchanged. I'm actually not the crazy radical libertarian-ish guy you think I am, okay, number 1. Number 2, I would like to give you all a raise, but I can't do that just because of federal pay schedules. However, what I will do is make it feasible for everybody to work from home. And there's actually stuff around this now. Of course, that's being totally legalized due to Corona and so on. But there's stuff around expanding work from home and whatnot. And the reason that work from home is important is it's kind of like giving people a raise. They don't have to drive. They get more hours with their family, all that type of stuff, right? Optional, of course, but would have been a big thing. And the third thing I would have done is I would have basically set up an exam for the top 1,000 people, let's say at FDA, to come in by examination and set up regional centers for fast-track approval of medical devices, drugs, vaccines, et cetera, in collaboration with local governors and mayors, and also, internationally renowned universities. And this is actually what's starting to happen with these, with these compacts that are happening, like the Western States Compact or the Midwestern Compact, the Northeastern Compact, the Tri-State Area Compact, where you'd have, for example, Columbia and Cornell working with New York State, or Harvard working with, the Northeast, or Mayo Clinic working with the Midwest, or Stanford and UW working with the West Coast. And you have essentially local competing centers of excellence that are trying to get things through, such that you're actually subjecting regulation itself to controlled trials. That had not been done.
Interesting.
Okay, right? So the point is, everybody talks about controlled trials, but there hasn't been a controlled trial for the regulation itself, which is the meta kind of question, right? So applying science to regulation itself, we need to actually have a jurisdiction with a law, without it, to actually see what the effect of that law is, right? And so that would have basically been what I would have done. And, everybody who wanted to could have still kept the original FDA pathway. But those who wanted to opt into this new kind of pathway could have done something where, let's say, they pledge 10% of their equity to, the state of California or the Western States Compact, so that the citizenry get a benefit. Maybe it's 20%, maybe it's 40%, okay? But the thing is that venture capitalists, entrepreneurs, many of the folks who get into this space base are actually not money motivated. They're motivated by making a difference. And if you could get something out to the public years ahead of time, people would give up profit in order to do that because it would mean lives saved. And so I think that there's room for change there that I don't think is being exploited yet, and it hasn't been taken advantage of. And hopefully some of these Western states can do it. Okay, but coming back around all the way.
That's some of one of the first times I've ever heard you speak publicly about that.
Yeah, it's only the first time I've spoken publicly about it. It's been a while in the past where I'll probably write an essay or something on it.
Well, it's so interesting, just the sort of polarizing reaction that speculation provided. And polarizing in the best way. There were people who were saying, this is a radical split. This is how you actually do innovation. This is how you make government actually save lives, how you create change, how you apply all the wisdom that we've learned in Silicon Valley to this regulatory process so that we can have the outcomes that we need. And then on the other side of the coin, not surprisingly, you had people saying, henny penny, the sky is falling. This is the sellout of the FDA to Silicon Valley moneyed interests, and people are going to die. So you have these really radical divergent views. But it's also so interesting to me because while you see that clash around the rumor, around the speculation, it's very clear to me that if we look at this on a 20 or 40 or 50-year time horizon, right, the direction that you're moving in with this is the direction that the country is broadly going, just because we've learned so much. We've innovated so greatly. If you look at, what we have been able to accomplish with information technology, the ideas, the philosophies, the capacity to execute, it's very clear that this is the direction that we're going. Now, there's still some questions that we have to work out. There's still some things that we need to figure out, but this is clearly the overarching direction.
I mean, to me, Corona has shown us that the cost of risk aversion is massively risky, right? Like I say, if you don't take lots of small calculated risks along the way, where yes, people might die, you have this system that's incapable of rapid physical innovation that has led literally to the loss of trillions of dollars and 100,000 dead and 1 million infected, and that's all on the FDA, right? Like, should I say all? I'd say a lot of it is on the FDA for holding back a generation of biomedical innovation. And so, yes, I totally agree with you. I don't even think it's a 10 or 20-year thing. I think we're going to now unleash a bunch of biomedical innovation, having seen the consequence of holding it back. This, by the way, brings me to crypto, right? Which is...
I know we've talked for 20 minutes, but it's not every day that you have someone who might have radically changed an agency like the FDA. So we have to cover that.
Well, yeah. I mean, the thing is, sometimes you need the timing, you need events, right? And I think that Corona will be to the FDA what crypto was to the Fed, right? An entire generation of entrepreneurs and people recognize that the previous dispensation failed. And it failed dramatically. And in fact, a huge chunk of the population has now learned that. And a system that was, for lack of a term, I call it optimized for optics. Right? So many things in the federal bureaucracy, or frankly, any government, are set up like a Potemkin village, where they're meant to basically withstand like one or two journalists poking, and they'll just ask for an official quote, and they really won't poke too far. They won't try to add 2 + 2 up to get 5, and so on. They won't really diligence it around the side. It's an expert, and they don't question the expert. Look at how folks have excused their Corona coverage. Oh, we asked the expert, and they were wrong, right? And so what happens is you have these things that are Potemkin villages, and it's only when there's like I would call it a 100-year flood, but frankly, we're getting these floods every 10 years or so. When there's a 10-year flood, you see, the CIA doesn't actually know what it's doing with WMDs in Iraq. The Fed actually didn't know how to prevent recessions with, the 2008 crisis. The FDA and CDC actually don't know how to prevent infectious disease or drive biomedical innovation. And you see it's all a Potemkin village, and it all falls over when there's a big enough thing that it cannot be obscured. When individuals are basically forced to basically become amateur, economists in 2008, 2009, or amateur epidemiologists and infectious disease specialists today, simply because the folks they outsourced that to couldn't do their job. And I think that's, it's bad in some ways, obviously, the folks you outsource to couldn't do the job, but it's also, in a long-term sense, something that unblocks innovation. Because people realize that, look, you can't just outsource this, you have to do it yourself. This brings us to crypto, right?
It's the perfect pivot, in fact.
Perfect thing, right? So, essentially, I think, Satoshi Nakamoto's timing couldn't have been better, where, Bitcoin was released about 3 or 4 months after the financial crisis. in January 2009 was the first Genesis block, the actual the block of Bitcoin. And if you date the financial crisis to like October, November 2009, or 2008 rather.
It's about Halloween, right? It's good. Around.
Yeah, about Halloween was when the white paper came out. I forget the exact date, but I think it was around then. And then
30 or 60 days later, the Genesis block was minted.
Correct. January 3rd, 2009, I believe. I think that's right. And the thing about that was, Bitcoin wasn't just a technological breakthrough, isn't just a technological breakthrough, though it is that. It's also a conceptual and philosophical breakthrough where there are many design decisions Satoshi made that you just didn't understand unless you understood the problem that he was trying to solve. By the way, the reason I call him he is that's what he put on his profile or whatever online. He had
right.
self put that. And so the thing about the problem he's trying to solve was so-called trust minimization. It's often phrased as a trustless system, but I think a somewhat better way of phrasing it is a choice of whom to trust. Because the thing is that right now there's sort of a battle, a discussion within the crypto space as to whether the ideal is crypto anarchy or something that I call crypto civilization. And what I mean by that is Bitcoin and crypto more generally, and there's a bunch of other internet tools that are like this, encryption, and so on, allow you to essentially draw trust with your balances from banks, right? Withdraw your consent from encrypted channels and so on. Like you're not consenting to be eavesdropped on. To withdraw your consent from these centralized systems. But then the question is, do you just try to be a pirate on the high seas and trust no one? Is it Mad Max, right? That's a crypto anarchy vision, arguably, at least for some. But to me, the right answer is crypto civilization, where you pull your pointers, you pull your backlinks, you pull your deposits out, but you then re-centralize around a better system. Because, and I think that's a real subtlety that's missed. It's not just centralization versus decentralization. There's also re-centralization where you have a vision for a better system than the one that you left. Because people also don't really want to live in an anarchic world. They do want to outsource some things over time. They don't want to try to do everything full stack themselves. As just one example,
right.
when you go to Starbucks, you don't want to take a dipstick with you to try to test every single drink for whether it's poisoned, right? You want to be able to enter a store and not necessarily be defrauded with every single possible transaction, right? Like you do want a regulated marketplace, but you want a choice of who that regulator is when the current regulator has lost your trust, right?
This is so interesting because it puts them in a very much a middle position between the sort of crypto anarchists in the one camp and the traditionalists on the other who are terrified of cryptocurrency. So it's an interesting hybrid, and it's my sort of expectation that that's the direction that the industry more broadly is going. We can talk a lot about the philosophical issues around it, but we're starting to get a lot of questions in right now about the halving,
Sure.
what we are nominated here to talk about. So before we actually talk about the halving itself, let's set this up. So explain just very broadly the context in which this is happening, specifically the importance of proof of work, mining, and block rewards in securing the Bitcoin blockchain, and why it's so important to understand to get to the halving.
Sure, great question. So, one of Bitcoin's fundamental value propositions is that there are a fixed number of BTC and roughly 21 million BTC, and that there will never be any more. And that's baked into the protocol. And the way this works is approximately every 10 minutes, a block is mined by miners who are all competing to mine that block. And that block includes within it all of the transactions that that miner has chosen to mine, and is essentially appended to all the previous blocks of transactions. And as a consequence of mining that block, the miner can award themselves a certain amount of BTC. And roughly every 4 years, though it's sped up as I'll get to, roughly every 4 years, that amount of BTC the miner can award themselves drops in half, from 50 to 25 to 12.5 to 6.25 and so on. And that that halving is essentially a choke on the supply of new BTC that's introduced. And in general, when you have a market with fixed demand and newly constrained supply, you will usually see a price spike. Now, what's happened before is about 6 months or so, to the extent that Bitcoin has any predictability, because it's a very unpredictable space. On the order of 6 months-ish after every halving, there's been a huge surge in the price, and things have gone to the moon and so on and so forth.
Which is the reason why there's so much focus on it, right? This isn't right now. There's an expectation or interest from people who are not traditional computer scientists. They're interested in it because, exactly as you say, the price has gone to the moon when this has happened before.
Yeah, that's exactly right. That's exactly right. And it's something where it's very clever the way the halving is. I mean, the biggest thing about BTC, it has a predictable monetary policy. You don't wake up one morning and you see Fed announces $3 trillion repo, or somebody messes with the interest rate. You have a predictable monetary policy. And what's really interesting is over the last roughly 10 years, I guess it is now 10 years of Bitcoin, it's 11 years actually, you've actually seen how many different forces want to interfere with monetary policy. Right. For example, they want to unwind transactions. Right. They want to create blocks where they award themselves some money. They want to issue new coins to pay for various, like transaction fee things for miners to pay themselves. They want to freeze funds. All of that type of stuff. You can argue whether that's necessarily strictly monetary policy or whether that's more like the Visa style transaction policies and so on. But people do want to mess with this stuff. And what they've been able to do is mess with that on chains that are outside of Bitcoin for the most part. They haven't really been able to mess with it within Bitcoin itself. And that's this remarkable, remarkable thing where something that is just truly rigid, it disappoints lots of people in the short term, but long term, it's super reliable and interesting and something that you can plan for the long term on, and that's very powerful.
Yeah, I'll give the counterpoint to that argument. This is people who favor a more activist Fed. The counterpoint would be that should the productive capacity of an economy depend on rigid, fixed schedules when there are shocks that are by nature unpredictable, and the Fed needs to respond by having a monetary policy that is dictated exclusively by laws that have been written into code ahead of time, you diminish the capacity of a central bank to actively manage an economy. And the obvious example that some who are akin to that view would point to would be, for example, the coronavirus shock. If you did not have a Fed to step in and stimulate the economy, demand would fall off a cliff, supply would collapse, and the economy would go over the edge. Goes that line of thinking. What's your response to that?
What's my response to that? So, one way of thinking about it is, when a company issues equity, right? Like it's printing new shares, and that's not necessarily a bad thing. It can raise money doing this, right? But it is disciplined by the market, where every actor in the market can choose to retain dollars rather than purchasing into this share class. And if that company doesn't have a growth rationale, right? If it doesn't have fundamentals that justify its issuance of new shares, then people will decide to hold on to their USD rather than buying into shares of XYZ stock, right? So yes, they can print, but they're disciplined and held accountable by the market, right? In the same way, BTC is now shift that role over one, right? The Federal Reserve or any country can issue new currency, and they may have some argument which says, hey, this is necessary to return us to growth. We're going to use the proceeds for this, that, and the other. But the BTC holder can opt out of that. They can say no. And that is new and very powerful, that you can opt out of all of these governments' active monetary policies and what have you, and you can say no. Now, I personally think that all of this printing is, just like with a company, right? There's companies that, they use equity and debt wisely, right? And there's companies that do not. Right, Amazon, I trust Jeff Bezos. I think he's a very good allocator of capital. Blockbuster or or other companies that I don't attack anybody or whatever. There's lots of other companies that are not good allocators of capital, and the way that the U.S. government, for example, has allocated capital during the coronavirus crisis, I would not say is optimal. Of those $2 trillion, how much went to masks and drugs and vaccines and tests and so on versus various kinds of political things, which we're all finding out about now, right? It wasn't like done by philosopher kings. It was something that was done because it could, and a bunch of pigs came to the trough, and we don't even know what's in the bill. $2 trillion is a lot of money, and there's another $3 trillion, and trillion here, trillion there, as you say, you're talking real money, right? And, really one way of thinking about that is it's a gigantic dilution of everybody's dollar holdings. Now, I know that view to some is controversial, but if you think about it from that standpoint, where it's sort of like diluting people down on a cap table, you print a bunch of dollars, and especially if you're using them to like bail out stocks and things like that, where the stock market seems to be surging even as unemployment is crashing, it's arguably like the upward redistribution of wealth, right? Where you're basically diluting down everybody, but you're using the money to buy stocks and you're bailing out equity holders, but not everybody's an equity holder because, like many people don't own shares. And so then you start getting into territory where it's like, okay, there's clearly political use of these funds. It's not something that everybody agrees with. And so therefore, how do I withdraw my consent from that? Mm-hmm. And that's BTC.
Well, dilution never happens in the Valley, Balaji.
Sure. No. I mean, that's the thing. Like, what's great about tech and about startups and so on is you see companies born and you see them die, and you see some of them, a few of them, grow. And you just learn so much out of that process. This is also why I think, tech folks, at least some of them, are kind of, for lack of a term, paranoid is, I don't really like that term, but Andy Grove uses it, only the paranoids are. Yeah, it's because you've seen many examples of corporate death, right? You've actually seen companies go bust for bad reasons. Right. And as such, you kind of know that, like a bullet could whiz by your ear. Winston Churchill has the saying, like, there's a great deal of ruin in a country. There isn't a great deal of ruin in a company, number one, right? And, there's within a country, there's a great deal of ruin, but not an infinite amount, right? Spain is no longer, an international power. Neither is, arguably the Soviet Union. So yeah, I think that's the role that BTC serves. In an interesting way, by the way. Go ahead.
I was going to say, it's so interesting to talk about the philosophy of the Valley. And there's another quote variously attributed to Winston Churchill and George Washington, that there's no more exhilarating feeling, I'm paraphrasing here, than to have bullets whiz by your ear without effect. And it's interesting about the philosophy of the Valley. And one of the things that, one of the reasons I, like many people, began my career as a consultant, because you're able to get a lot of experience very quickly. And Silicon Valley, one of the chief attributes of it is the speed at which companies can rise and fall, because things are digital, because you're not physically building plants and all of these sort of things. You can see a great deal more happen a great deal faster than you can anywhere else. And so the experience in that particular region of the company, in that country, in that particular sector of the economy, I think brings so much to the table for the models that we're going to use, not just in Washington, but here in New York and in finance. And it's something that is, I think, incredibly exciting, and we're seeing and having you on Real Vision, I think, is very much a part of that broader trend, to have people like you who've had this experience, and there are not a lot of them who have at the level that you've had it, bring that experience to a broader array of problems. That's what you're doing, I think, on Twitter with you're running commentary about the coronavirus controversies in terms of the way that the government is responding to it, and also now with cryptocurrency. So getting back to the topic at hand. So here we are, we're coming up to the halving. What are your expectations concretely about what is going to happen in the weeks and months ahead?
Well, I mean, I'm long BTC, but I've been long BTC for, I don't know if you've seen my Twitter bio thing or whatever. If you go to archive or what have you, for a long time it was, I think this Bitcoin thing's a big deal since late 2013. And I've had buy Bitcoin as my, if you go to my Twitter heading. So I've always been long BTC, but I've always resisted giving, forecasts because, frankly, that's your guy's bag, right? That's a trader's bag. That's, what I like about cryptocurrency, which is interesting, is it's a domain where venture capitalists need to learn timing, and East Coast folks need to learn technical diligence. Right? Like, because the VC model, actually, one way of thinking about it is you buy the all-time high in the expectation it goes higher. Right? You buy, if you think about it, it's kind of crazy, but that strategy actually often works, right? In the sense of you buy the Series A or the Series B in, Facebook, and it goes up, 100x or 1,000x from there, and you sell it at IPO because it's just going whoosh, right? Exponential. Whereas with crypto, it's not necessarily like that. It goes up and down and up and down. It's like a publicly traded startup. So, long term, I'm very bull on Bitcoin, and on frankly on Ethereum and Zcash and a few others. But I'm, I never give like a short term price prediction because it's crypto, right? Like, who knows, what's going to happen next week or next month? It's a crazy space. But buy and hold for 5 years, 10 years, I don't think you'll be disappointed.
Yeah, and that gets us into some of the questions. My screen here is lighting up. Real Vision Plus subscribers are watching this, and the questions are coming in fast and thick.
Sure.
So let's start out. So this one's coming to us from Melvin. After the halving, if Bitcoin prices drop a little, many miners will stop being profitable, he says. Transaction costs would have to go up exponentially to cover mining costs. Isn't there a real risk in that scenario that Bitcoin is creating its own end? Melvin sounds a little bit bearish on this. What would you say?
I don't think so. I mean, at this point in 2020, this is a very mature market, the mining market. People spreadsheet this stuff out to, multiple decimal places years out and have all kinds of envelope functions. There's functioning derivatives markets, for example, like where folks can offload risk if the price goes too low. Like miners will do that. It's not something where, yes, the marginal miner will go out of business, but this is a very predictable event. It's not like a Corona or something like that. It's the opposite. It's extremely predictable that the halving was going to happen. So these folks have budgeted for that. And if they didn't, then they'll go out of business, and then the difficulty will readjust, and things will continue.
Talk a little bit very quickly about the difficulty in a transaction and why that's so important, and how that adds a safety valve of dynamic ability to recalculate.
Sure. Yeah. So difficulty is one of the most non-obvious things in the Bitcoin protocol, and the basic way of thinking about it is. Every 10 minutes or so, there's a Bitcoin block that is mined, and what's happening is different miners are competing to take different transactions and pull them together into a block, and when they're doing so, they're trying to calculate something called a hash, and the difficulty represents roughly how many leading zeros there are in that hash. They're basically trying to solve an inequality, and the number of leading zeros is roughly how difficult it is to find a solution to that inequality. There's actually a very large number of possible solutions, but as the number of zeros increases, it becomes harder and harder and harder to find such a solution.
This is the nonce and the actual.
Well, the nonce is an input to this problem. Essentially, you're computing a function of a few variables. It's a nonce, it's the transactions, it's the block header, and it is the miner's own address that's put in to get the funds back. And what you get out is. So let me explain how the difficulty works, though, for like a layman. The basic idea is no matter how much compute is thrown at the Bitcoin network, it readjusts such that Bitcoin blocks are mined roughly every 10 minutes. And the reason it does this, because it's very counterintuitive, you would think, wait, if I throw more compute at it, shouldn't it approve transactions faster? Right? That was one of the most counterintuitive aspects of the Bitcoin protocol when I first started learning about it. Why is this not something where you throw more compute at it and it runs faster? And the answer is that compute is not meant to make it run faster. That compute is intended to make it run more securely. That is to say, to make it harder to go and rewrite history and have people award themselves BTC in the past that they didn't have today to unwind the chain and rewind it. And that concept of extremely expensive to falsify history, right? Like essentially digital undeletable history is super powerful, because if you can use it to give a record of who has what money in the world, you can use it. I mean, that's an extremely important fact to align upon, right? Whether you're in the Middle East or in Brazil or in Japan or in the US, everybody agrees on the state of the Bitcoin blockchain. I mean, folks can't agree on like how many people are dead of coronavirus. They can't agree on like really basic facts about the world. It's amazing how polarized things are, right? But this they have to agree on because it's a mathematical fact that's extremely difficult to falsify, right? No matter what else other crazy things they believe. And it's very powerful, and I think it's a way to sort of rebuild truth and consensus in an adversarial environment where you have economically incentivized, actors who want to kind of try to falsify truth. So what the difficulty does is basically it takes these different miners, and it forces them to mine every 10 minutes, such that even if there's a ton of new mining power that comes on the network, they'll mine at a faster rate for a while, and the difficulty will readjust such that they're again mining every 10 minutes.
Complexity adjusts upward, and the
yes.
goes back to 10 minutes. So let's just
That's
keep
right. It's on average, I should say, on 10 minutes, not 100.
On average.
Yeah,
on average. We're getting a lot of questions here. So Sammy has just sold some property. He's done very well. He's obviously interested in the space, and his question is, I think, one that a lot of people have, which is, how would you think of allocating the capital that he's just had on this on a profit, and what proportion would you allocate to Bitcoin and Ethereum? And just by way of a little bit of context here for people who are not as familiar with the space, as you are, roughly there's a measure called the BDI, Bitcoin Dominance Index, which is what percentage of the total market cap or enterprise value or network value is represented by Bitcoin. And today, as we're doing this broadcast, it's about 67.4%, meaning that roughly 2/3 of every dollar in the publicly traded cryptocurrency right now are in Bitcoin. So to get back to Sammy's question, how would you allocate capital between Bitcoin and Ethereum and other coins if that interests you as well?
Yeah, so I mean, they used to ask me this question all the time, and when I was at Andreessen Horowitz, when I was at Coinbase, I couldn't give an answer, and now I will choose not to give an answer, or rather, and let me explain why. What I will say is.
By the way, I have to break in and say it's been part of your life. Another part that people may not know about is you were the CTO of Coinbase and a general partner at Andreessen Horowitz, two of the classic gilt-edged Silicon Valley companies, and significant players in both of the VC space and probably the dominant player in the Bitcoin B2C space.
Yes, yeah, I think that's right. Very kind. I think so. Just on this specific question, I think with respect to the reason I couldn't give answers then is I was statutorily and institutionally constrained, right? Here's what I would say. I would say if you don't know what you're doing in the space yet, buy BTC and learn, right? First, most people will buy BTC custodially on Coinbase. Then they'll get a wallet. They'll play around with it. They'll immerse themselves in the community. They'll develop their own theses on it. And the thing about crypto is, it's like this. It's this amazing junction where people come to it from a bunch of different disciplines. You come to it from computer science. You come to it from like libertarian political theory. You come to it from venture capital and entrepreneurship. They come to it from Wall Street and finance. You come to it from economics. Some people come to it from just pure gambling, and day trading, right? And it's something. And then other folks like supply chain, or other kinds of things, right? And so it's this meeting of a bunch of different kinds of cultures, and what's going to happen is you're going to come in with some thesis on it, and then you're going to, BTC is sort of like the lingua franca of this crypto Babel. Everybody, no matter what their crypto subculture, knows and respects BTC. If you're in Ethereum or you're in EOS or you're in Zcash or you're in Cosmos or whatever, BTC is just kind of the universal sort of denominator. So you really won't go wrong by, having BTC. But then from that point, what you do next is going to be based on the kind of thing that, I mean, many people just stop there, by the way. Some people stop there simply because they can't or don't want to diligence anything else. And it's actually totally legitimate. It's like buying index funds, you know? You buy an index fund, and unless you're a professional stock picker, you're probably not going to beat the index fund, you know? And even if you are, you may not beat the index fund. And that's kind of what BTC is. It's sort of like the index of crypto, and you have to be pretty good within the space to beat that, right? So for many people, I would just say stick with that, right? But then if you want to go further, it depends on sort of your thesis and how you're exploring the space. For example, if you're very much into privacy, then looking at Zcash is interesting. If you're interested in programmability and from the developers, and then not just Zcash, but other ZK snark related things, you know, Grin and
the zero knowledge proofs.
Zero knowledge proofs. That's right. Exactly right. So some amazing stuff that's happening there in terms of privacy preserving computation. Hugely important, frankly, for where the internet is going, and it'll bubble and develop over time. But so that's like one angle if you care about that. Another angle, if you care about finance, is to get into Ethereum and DeFi, where every single financial instrument is being rebuilt on chain, from, you know, derivatives to stocks and bonds and what have you. And you can basically set up a Bloomberg terminal anywhere from your computer without a Bloomberg terminal fee. Okay, and that's insanely valuable and interesting, because what's going to happen is, just like, you know, Twitter, how many folks were journalists in like 1995 versus posting online by 2015? You know, it went from, you know, a few thousand people to hundreds of millions of people posting online. In the same way, crypto is going to, if the internet turned the world into publishers, crypto is going to turn the world into investors and financiers. And so if you're interested in that, then Ethereum and DeFi and all of the new like protocols that are related to that are interesting.
You know, this is a space that Real Vision is very interested in, and we're looking into right now, doing some content on precisely that. Let me just move on here, because we've got a lot of questions coming in.
Sure.
So this is one, and this actually touches on the point that you were just making in some ways. So we got a question coming in from Lee, who's a Real Vision Plus subscriber, saying, my question is, why in the crypto space is Bitcoin considered the standard? Is it just because they were first to the space and have become the de facto standard because of that?
It's a bunch of things. Certainly that's one component of it. Like Bitcoin innovated on a number of different dimensions simultaneously, in the same way the iPhone did. You know, like the iPhone, even from today's vantage point, if you go back and look at it, it was the multi-touch screen, and it was, you know, programmability. It was a bunch of things. It was a true leap. You know. And Bitcoin was a true leap in a number of different ways. It was truly decentralized in the sense of, you know, the database of transactions was not hosted on any one machine. The protocol worked despite handling money. It, you know, proved robust to a number of different kinds of attacks over time. And it built a community, and the founder disappeared, and all these other things. It's kind of like Unix, you know. Now it's become something where no matter what else you do in cryptocurrency, you usually start off by explaining how it differs from BTC.
Right.
You know, like Ethereum, when it came out, like was its tutorial started with, okay, here's how you understand Ethereum concepts in Bitcoin terms, right? Right. So it's just become this kind of lingua franca. And then, you know, for example, you go and you talk to, like I talked to a relative the other day, and they were like, oh, Balaji, what kind of Bitcoin should I buy? Right. And that's a completely, I laughed, of course, but it's a completely legitimate question for somebody outside the space. You know what I mean? Like the vocabulary isn't fully there, but that's like the brand recognition that the thing has, right. You know? And that's like, so it's a combination of brand, first mover, disappeared founder, adoption, all those things together.
Right. And maybe if I wanted to be a little bit facetious, I could say, but none of us are writing shell scripts in Emacs any longer.
Oh, I am. Yeah.
I would have thought you were a VI kind of guy.
I love Emacs, but that's because it's got R integration and so on. So I can do all my stuff like with, if you can run R within Emacs, and when a Vim doesn't, I'm sure there's people who will flame me about this, but Emacs for life.
All right. Anyway. We've just gone deep into the nerd. Talking of which, we have a really interesting question from Bjorn, another Real Vision Plus subscriber, who said, what about the perhaps misconceived notion that quantum computing can disrupt the $20 million limited Bitcoin supply? Is that narrative 100% wrong?
So, you know, like That's actually a good argument in the sense of that's a kind of thing that in theory could break assumptions behind Bitcoin. But there's folks who are working on not just quantum decryption, but quantum encryption. I'm not enough of an expert in the area to like, I'm not on the frontiers of quantum computing. But I do know that there's actually, I think Dan Benet is either working on or has published something on this. My short version is, in the event that the hash function is actually compromised, it is possible to swap out the hash function. And so then you'd have to ask, okay, would you have a scenario where quantum decryption was possible by a centralized adversary, but quantum encryption was not? And I guess you could imagine situations like that where, you had a Manhattan Project-like thing by the Chinese government or a large government that could do quantum decryption, but you couldn't do quantum encryption locally. However, I think you'd have to get into the guts of the algorithms, and I don't know enough about it. I'm not on the cutting edge of that right now. I do think, however, and I'll always say when I don't know something, you know what I mean. I do think, however, that Dan is writing something on this or has published something on it. So if I have a link, I might tweet it out later on Twitter.
Fantastic. No one can ever accuse us, Balaji, today of not going deep enough into the weeds. We've touched on quantum encryption. So another Real Vision Plus subscriber, Don, is asking, I said, you briefly mentioned some of the other cryptos that you are in, that you're an investor in. Can you be more specific about the cryptos you're in and explain why you like them? And maybe a little bit, this is from me, a little bit about the context and use case for why the cryptos you're in, you are so enthusiastic about right now.
So, I mean, I'm in a lot of cryptocurrencies. Assume that, most anything legitimate, I have like a small stake in it at least, or what have you. And the reason for that is actually a fewfold. I believe in BTC, but I also believe in, freedom of speech. I believe in the fact that people should be able to not be deplatformed, that they should be able to own their own distribution channels, to be able to monetize online, to be able to encrypt their communications, all that type of stuff. And I think that we're going to need more than BTC to protect freedom on the internet. And, like Corona has kind of accelerated that, where governments are taking up incredible levels of, invasiveness in terms of privacy and what have you. Some of it justified, arguably, by the crisis, but none of it will be surrendered after the crisis. That's a big lesson we've learned, is whatever powers they take on, even if maybe they solve the problem, which is a maybe, they won't be given up. And so,
this seems to be true across the board of governments. It's not just a unique.
Yes. Absolutely, that's right. It's not really a critique. It's just the ratchet only goes one way. It's very hard to get people once you've got a bureaucracy in place, and for example, it required the pandemic to get HHS to finally allow people to do telemedicine across state borders, basically. To allow doctors to practice like a Texas doctor practicing in Oklahoma. This is like a huge deal, right?
Right.
So bureaucracies have a way of their own where really only a crisis kind of breaks them up. And so the kinds of technologies I'm interested in are those that complement BTC, where BTC is a digital gold. I don't feel it's threatened, but I do think we also need a digital banking system. I think we need private coins. I think we're going to need, for example, streaming video and, uncensorable messaging and all this other type of stuff, right? And I think that crypto will be a massive component of that, even if it takes 5, 10, 15 years for the whole thing to build out. We'll see. I think it's going to get accelerated as a function of this, by the way, and that's a whole separate thing we can get into. I tweeted this actually, Ash. Act 1 is the virus crisis. Act 2 is the economic crash. Right? Did we talk about this yet?
I think we might have touched on it a bit in the last interview.
I'll riff on it for a second, okay? So in the virus crisis, which is still ongoing, of course, people had to execute what I call a digital Dunkirk, a Dunkirk evacuation to the cloud, right? And sort of to escape the viral blitzkrieg, which was coming there, people evacuated to the cloud. And everyone who can is trying to work remote and, do everything they possibly can online as opposed to going in person and so on. Okay. So, and live to fight another day, basically, and gather information on the virus and then counterattack, right? Okay. Now, the reason that has at least kind of worked is that the graphical web is at least 25 years old, going back to 1994, and the internet is even older than that, obviously going back further. And so these services were at the scale of hundreds of millions, or in some cases billions of users with Google and Facebook. And Zoom didn't collapse and buckle. For the most part, these tech services stayed up. And which is actually remarkable, just given how much load they're under, right? It's like actually kind of amazing. But that's something where I think okay, so here's an edge case, all right? I'm not saying it's 100% probability. I'm not even saying it's 50% probability, okay? But I think it's more than 0% probability that we have a bunch of different tidal waves that are being kicked off by this viral meteor hitting. It's not, unemployment people have seen, right? But there's a bunch more of these Thanksgiving Day charts. You know what I mean by Thanksgiving Day chart, Ash? Right? Like Taleb's chart.
Nassim Taleb we're referring to. Yes, yeah.
That's exactly right. That's right. So like the turkey is healthy, and then day 1001 just kind of goes down like this, right? And the economy is filled with these Thanksgiving Day charts. It's oil prices, it's bonds, it's left and right. Things are just getting killed, and in some cases going vertical. In the case of like Slack or what have you, right? Or Microsoft Teams. But for the most part, just getting axed. And there's a scenario which is a genuine economic crash where, for example, 2008 was a near miss financial crisis. Right. That's why it was a crisis. It wasn't a crash. ATMs still worked, checks still cleared, and so on and so forth. It's possible that they're just printing, the system has 10x as much slack, that the financial crisis, even then it didn't push it to the limit. And you can print $3 trillion a week or a month or whatever. I don't even know how many trillion they've been printing up till now, that you can have all of these things break at the same time, that you can have, 60% of the economy shut down, bailing out the other 40%, or whatever the numbers are, because it's happening in real time. Like retail goes bust, and tourism goes bust, and air travel goes bust, and hotels goes bust, and everything goes bust, but you still somehow bail it out with printed money. Maybe that somehow works. Or maybe we get something which is a combination, deflation and inflation of the following kind. Deflation in the sense of a crash in the prices of everything people don't want anymore, like travel, like hotels, concerts, restaurants, bars, right? All of these things related to crowds or to leisure. There's a crash in prices there as people husband their cash in given uncertain times. And then you have a spike in prices for all the things people do want, like masks, like Purell, which we've already seen, by the way. I don't know if you saw like Amazon's charts, right? Those have already gone up. And
it's like the models have to adjust to this, right? The traditional definition of inflation is that it's a sustained, broad-based thing. But the question is, the price of it's really hard to find an N95 mask in May of 2020, and also the risk of food price inflation is a separate category.
That's exactly right.
Yeah,
that's right. That's exactly right. And in fact, I tweeted this last year, which is, people were like, oh, hey, where's the inflation? And there's actually a good graph which shows, and you can look at my Twitter or whatever, the inflation, is here. It's just not evenly distributed, right? Yeah. That is, it was soaring in the sense of, let's more narrowly define it as real price increases, right? Happened in education, in healthcare, in real estate, right, and in food and so on, like the areas that the government was regulating or subsidizing or bailing out or whatever in some way.
And in the first two, it's been dramatic, especially if you look at a 20-year chart. If you look at the price inflation in healthcare and in education, it is overwhelming and massive. And their feed-through is creating a huge amount of debt in consumers. That's
exactly right. And also, of course, inflation in asset prices, right? Like, because it's printed money, where'd it go? It went into, at least some of it, into banks and buying up assets, including startup stock, other kinds of stocks, right? Bonds, all this stuff. And then you've had a crash in prices with everything technology has touched, right? And that's a narrative of the last 10 years, arguably. And now I think it's even in fast forward. And roughly that narrative is, you have a tug of war between the inflation of the East Coast, which is trying to bail out zombie industries, right? In the 2008 crisis, it was bailing out the automakers, bailing out the banks, propping up real estate by buying mortgage-backed securities. And then, so trying to prop things up, these zombie industries and what have you. Remember, like GM is alive and, Osama is dead, that kind of stuff, right? And on the other side, you have the West Coast callow disruptors who are coming in and trying to crash prices and things, right? Crash the price with Uber and with Airbnb and with Stripe and with these other kinds of things, like bring prices down, disrupt these industries. And so it's kind of a tug of war between these two areas, and pretty much everything that technology has touched, the price is hyper deflated. This, by the way, I think is a very underappreciated aspect of the economy. Technology has actually increased equality in a few ways. One way it's increased equality is the hyperdeflation of informational goods. For example, Larry Page and a random Joe have essentially the same Wikipedia experience, essentially the same Google experience or Stack Overflow experience, because it's so cheap that it's just an internet connection, and a kid in Africa and a kid in Palo Alto have basically the same experience. A second way is you have, basically, it's much easier to be a tech billionaire than to be president. There's way more billionaires than presidents, right? When kids grow up in the U.S., everyone's told, oh, anyone can be president. Well, actually, statistically, it's easier to become a tech billionaire. So the second way in terms of opportunity. And a third sense is in terms of power inequality. If you only have, for example, in the Soviet Union, who was the second most powerful guy after Stalin?
Malenkov, I don't know.
Yeah, at various times you might have said Trotsky or you might have said Kirov, right? And they both got capped, right? And so the number two person in the Soviet Union, you basically don't know who they are, right? Or usually they're very much, under the gun, right?
Right. Whereas literally at times.
Literally under the gun, right? Whereas the number two folks in the U.S., you might say Zuckerberg, you might say Bezos, right? There's credible independent power centers beyond just, Washington, D.C., right?
You might say Jay Powell as well.
Exactly, that's right. And so that is actually something where on that third dimension, there's a greater degree of power equality, rather than just one super powerful, godlike dictator president. You actually have all these billionaires who can mobilize and amass their own resources. And in the case of, for example, Bill Gates going and funding a bunch of different vaccines, maybe we're very grateful for that, right? We're grateful that there's someone who can allocate those resources, and we don't have all of our chips in one basket there, right? So
let me just
anyway, go ahead.
No, I was just going to say, my producer has just texted me. I can't believe this, but we're getting close to the 1 hour mark. This has absolutely flown by. I just wanted to hit you with maybe three quick sort of speed round questions.
Please.
Quick thoughts. Rovision Plus subscriber Owen is curious about what your thoughts are on XRP, on Ripple.
No comment.
Okay. It's always a controversial one. Is Bitcoin, it's coming to us from John, is Bitcoin an alternative to fiat, or is it an alternative asset like gold 2.0? Interesting question.
It's alternative to both, I think. I have nothing against folks who are into gold, or frankly, even folks who hold dollars. But I do think that, gold is kind of the past, right? Like there's... the fact that you can custody BTC on your local hard drive, one way of thinking about it, I remember I tweeted this a while ago, but in 10 years, it's going to be something where Bitcoin's been around for 20 years. And, to like the 30-year-olds in finance, it might as well be gold. It's been around since, think about the internet, right? Let's say you were 10 years old in the year 2000, okay? And now you're 30 years old in 2020. Does the internet seem like this newfangled thing where it's a question mark as to whether to use it for business? No.
It's totally basically into your life.
It's totally integrated into your life, right? And so that, I think, is the right kind of long-term thesis on the thing, is when do you start getting, a larger and larger and larger chunk of finance professionals who are like, oh yeah, Bitcoin, of course. Just like email, of course. Email is now old. Right? Texting is now old. It's kind of like that, right? And I think that is more important than pointing to like the 4,000-year history of gold, is more the generational turnover within finance. So by 2030 and certainly by 2040, you just have something where heads of state, heads of major banks, heads of major companies have grown up holding BTC, and that's a very different kind of matter.
Great. So final one, this is coming to us from Adam, is if BTC is an alternative currency and it begins to gain market share of transactions and the money supply, what's to stop the Fed from destroying it?
Well, I think, let me give a few answers to that.
By the way, until I finish that question, but it's an
Sure. So I'll give a few answers to that. First is, I actually think the U.S. government has now a bunch of folks in it who understand cryptocurrencies and have been fairly friendly to it, which is not something you would have thought in 2013, but it's certainly something today. For example, there's a Congressional Bitcoin Caucus. There's folks like Hester at the SEC, who's published good stuff. There's folks who understand it's a technological innovation, right? Congressmen who understand it can't be banned, number one. Number two,
they tried initially. There were a few.
Yeah. The number two is basically, frankly, the federal government isn't that competent. If you look at its corona response, it hasn't been able to ban the virus. And Bitcoin is also a decentralized actor where there's no one person you can go after to stop it or shut it down. It's an international computer network, number two. And number three is it's sort of something where, like, do I think like the final lightning round backlash kind of thing has begun yet? No. I do think that it's possible that if Bitcoin goes to 100,000 or 1 million, once it actually starts constraining governmental monetary policy and fiscal policy, yes, you will get a different level of reaction. However, I think a fair number of governments will embrace it and buy BTC for their own reserve, just like they hold gold. And so long as enough governments do that, Bitcoin survives. And if it survives, then it wins, because you'd have to ban it and stop it in every country simultaneously, and it'd be a huge logistical undertaking where the entire community is set up, to fight that from the beginning. So we'll see what happens.
I'm also a bit optimistic about U.S. regulators. I think that we have a lot.
I think so. Yeah.
Very smart people who really want to do the right thing, and I think that it's very clear that this has been a tremendous font of innovation for the country.
I think that's right. And the smart thing would basically be, look, the U.S. is going to be in a huge pickle after this corona crisis. You want crypto entrepreneurs to set up in the U.S. and you want to take a forward-looking approach with respect to this technology and with respect to these entrepreneurs.
Right. And as we start to wind down here, because we're running out of time, unfortunately, one of the main themes that we've covered in this conversation, and I think it's one that we talked about in our last conversation, is this overarching theme of East meets West, of the collision of the power centers of New York, of Silicon Valley, of the new ways that these two very distinct ways of looking at the world, the Washington/New York view on the one hand, and those are not exactly the same, but that sort of axis, and then the Silicon Valley entrepreneurial, very sort of tech-centric way of looking at things. As these worldviews begin to move closer together and integrate, I'm curious if you have any closing thoughts on that broader point.
Yeah, so I think that's actually the new, for lack of a better term, political axis in the U.S. It used to be north versus south, but I actually think that's fading away, and that the new political axis is East Coast, West Coast, centralized, decentralized, policy versus technology. I do think that, let's call it nationalist/socialist versus internationalist capitalist, MMT versus BTC. I do think that is, let's say the military versus technology. Like these are, I think, this is where the dyad, I think, is going to come over the next, few years, because there are different ways of dealing with the problem. Is your first impulse, someone should do something, which is the policy impulse, there ought to be a law, or is your first impulse, I should do something, and go and write some code, and there ought to be a company, right? Those are very, very, very different starting points in terms of where your locus of control is, how you think about things, and so on. I'm not saying either one is right or wrong, but I do think we're rotating, and I think a lot of the old divisions or what have you become less relevant, and that's kind of more how we think about it, the decentralized versus centralized. There's a great, actually, video on this, which is Hamilton versus Satoshi, which you guys should watch. watch if you haven't yet. You should send it out to the Real Vision folks. Reid Hoffman did it.
Fantastic. We'll check it out. So final point, Balaji, come back, switch chairs with me, and interview someone on the East Coast establishment. And let's have a dialogue on Real Vision with you leading the conversation about East meets West.
Awesome. The first thing I'm going to ask, negative discount rates. I've got my own thesis on it, but I want to hear about that.
That sounds great. I'd love to watch that.
Cool. All right, let's do it.
Balaji, thanks for joining us again.
Thank you.
If you like what you see on our YouTube channel, you can unlock everything that Real Vision has to offer, from expert analysis, in-depth reports, education, and more to help you understand finance, business, and the global economy. You can get all that and more for just $1 for 30 days.